For months, it really felt like the stock market, especially anything in tech, just couldn't lose. It was just up, up, and up. And then, bam, it wasn't. The market took this really sharp, surprising dive. And in this explainer, we're going to break down exactly what happened piece by piece.
So yeah, that's the big question, right? Why did a market that was absolutely soaring suddenly hit a wall? Well, the answer isn't some simple single thing. It was more like a perfect storm of different factors that all just happened to collide at the exact same time. Okay, so our investigation is going to start with the sector that had been, the life of the party for months: artificial intelligence. The optimism around AI it was off the charts, and that pushed stock valuations to some pretty extreme levels. This is really where the first cracks started to show out. I mean, just think about stocks like Nvidia and Palantir. They were climbing at this incredible pace. It seemed like every single day there was news about a new partnership or some big investment, and each one just added more fuel to the fire. It got so hot that some folks started to worry it was just a cycle of AI companies investing in each other, pushing the whole group higher and higher. The big question became, is this real, or is this all just hype?
And this slide right here, wow, this really puts that hype into perspective. So just take Palantir, for example. At one point, its valuation was estimated at 400 times its expected earnings. 400. That is a classic textbook sign that what investors hope a company will do has gotten way, way ahead of what the company is actually earning right now.
And this is where the whole story just pivots. See, Palantir actually came out with strong earnings, which you'd think would be great news. But it didn't matter. The stock just couldn't push any higher, and it started to fall. And just like that, the entire conversation around these stocks shifted. It went from limitless potential to this is just way too expensive. That feeling, that change from buy at any price to, uh-oh, this is pricey, well, that's what sparked that first wave of selling in the AI world.
So that initial dip in AI stocks, that was just the beginning. It was like the small rumble that triggers something much, much bigger, like a tiny snowball that very quickly turns into a full-blown avalanche of selling.
You know, when the market is already on edge, even comments that are meant to be reassuring can backfire. So the CEO of a huge financial firm comes out and says, a 10 to 15% correction would actually be healthy for the market in the long run. He meant it would be a good reset. But what do you think the nervous market heard? It heard a reason to sell right now.
And this breaks it down perfectly. This is the anatomy of that market avalanche. First, you get those super hot, overheated stocks that start to dip. Then, negative headlines, like that CEO's comment, crank up the fear. Then the people who made a lot of money start selling to lock in their profits. That pushes prices down, which then forces other people, who maybe bought at the top, to sell at a loss. And while all this is happening, potential buyers just get spooked and step away. So you have tons of sellers, no buyers, and the price just falls off a cliff.
Now, as if all this market drama wasn't enough, we had a political wildcard playing out in the background, the record-long U.S. government shutdown. At first, it really didn't seem like a big deal, but it quickly became a kind of accomplice in the market's big drop.
Yeah, in the beginning, Wall Street just kind of shrugged off the shutdown. They saw it as, political theater that wouldn't last long. But as it just dragged on and on and on and became the longest in U.S. history, that feeling changed. Because the market was already falling for other reasons, investors started looking around for more things to worry about, and suddenly the shutdown became this huge question mark for the entire economy.
And then, talk about terrible timing, we got the final blow. A report came out showing a big jump in job cuts. And guess what sector was leading the way? Tech. This news landed right in the middle of that AI stock sell-off, basically confirming everyone's worst fears and just pouring more gasoline on the fire. So that's pretty much how we got here. A perfect storm of crazy high valuations, a big shift in sentiment, and a dose of political uncertainty. But all of that brings us to this very moment, where the market is facing a really critical test, a true line in the sand. Now, to understand this test, we have to talk about a key technical thing called the 50-day moving average. Don't worry, it's pretty simple. It's just the average closing price of the market over the last 50 trading days. Investors watch this line really closely because it often acts like a floor, a support level, where a falling market can finally find its footing and buyers decide to jump back in.
And here's the thing. For the last 6 months, this particular line has been incredibly reliable. I mean, it's been like a trampoline.
Every single time the market has pulled back to its 50-day moving average, it has bounced right back up. It has been the absolute textbook signal for investors to buy the dip. And now, we're right back at that line. But this time, after such a sharp and scary drop, the stakes feel a lot higher. So, will buyers show up again, just like they always have? Or has the mood shifted so much that the market is finally going to break right through this critical floor? Honestly, the answer to that question could set the tone for the next several months. Okay, so we've looked at all the evidence. We've got the overheated AI stocks, the avalanche of selling, the political wildcards. Let's bring it all together and figure out what the final verdict is on what just happened, and more importantly, what to watch for now. So the final verdict is pretty clear. There was no single smoking gun here. It wasn't just one thing. This was a textbook perfect storm, where the fragile, nervous feeling around those overvalued AI stocks was just shattered by a cascade of negative headlines, bad timing data, and growing political uncertainty, all hitting at once.
So, looking ahead, what's next? Well, analysts are really watching three key things. First, any bit of good news, like the government shutdown finally ending, could trigger a really sharp rebound. Second, there's this risk of what they call return selling. Basically, as those beaten down AI stocks try to recover, people who bought near the top might just sell the second they get their money back, which could stop a rally in its tracks. And third, pretty much everyone expects these wild swings, this high volatility, to stick around for a while.
And all of that leaves us with the one big lingering question. Was this sudden drop just a quick, healthy reset that kind of washed out all the frothiness and set the stage for the next leg up? Or was it the first tremor, a little warning sign of a much bigger earthquake to come? I guess the market's next few moves are going to give us the answer.